If you're looking into buying a home, I'm sure you're looking at who offers the lowest interest rate. There's a lot of new advertising out there that shows you what the current interest rates are. However, a lot of the stuff out there does not particularly tell you exactly what your interest rate will be. Interest rates are the lowest in decades and enticing many borrowers to shop around for a loan. Mortgage lenders adjust their rates based on perceptions of risk. So unless the borrower can show they are in a low-risk individual, the borrower is unlikely to qualify for a rate that matches those seen in recent advertisements and headlines. The rates quoted are averages drawn from a variety of financial institutions, and lenders use varied approaches to set them. Consumers who want to try for the lowest rates available need to consider basic factors such as credit score, points, property type, down payment, and the length of the loan. Credit score. The ideal borrower has a FICO score of 740 or higher, which puts the individual in a best place for pricing. If you have anything lower than the 740, then the rates shown on most advertisements will probably not be accurate. Points. The lowest rates usually are decreased by paying a fee called a point, or 1% of the loan amount. Borrowers buy points in order to get the best rate at any bank. Points might make sense depending on borrowers' financial situation and how long they can expect to be in a home. Another thing that affects your interest rate is the property type. If you're planning to buy a duplex or a 4-unit building, you're likely to have a higher interest rate. Condominiums also may have a rate premium, especially if they are newer or your down payment is less than 25%. Lenders may also charge more if the borrower is not planning to live in the home. Down payment. Borrowers who put down at least 25% are more likely to obtain the best interest rates. Lenders offer different breaks on rates if equity in the property is higher, so borrowers should ask what is available. Length of the loan. Borrowers who are likely to move in a few years may want to look into an adjustable rate mortgage with a lowest interest rate on a fixed term and adjusted afterward. You may also be able to reduce your mortgage rate if you lock in an agreement with your lender. Lenders typically agree not to charge an offered interest rate for 60 days, but borrowers confident of a quick closing may be willing to accept a 45-day rate guarantee or even a 30-day lock in exchange for a small discount because the transaction speed helps the lender reduce its risks. Borrowers must make sure that they consider the entire cost of the home, looking carefully at monthly payment calculations. Keep in mind that about a third of home ownership costs are in addition to the mortgage, which include things like property taxes, insurance, maintenance, and repairs. For more information about finding the best interest rate or to get pre-qualified, go to sdhomemap.com.